So as they come off stage, I'm going to introduce straight away into our next session. And as I mentioned a little bit earlier, this is going to be a deep dive into investment and venture capital firms' roles in identifying, funding and nurturing innovations. Our panelists will discuss how blockchain continues to disrupt traditional industries and create new opportunities for investment. To explain more and introduce their guests, please give a very big warm welcome to Abhisam Toma, Editor-in-Chief at Inc. Arabia.
Hello? Yeah. All right. Good afternoon, everyone. My name is A.B. Sam Thomas. I'm the Editor-in-Chief of Inc. Arabia, like was just announced. I'm going to quickly call upon my speakers to join me on stage. Vineet Budki, Managing Partner and CEO of Cypher Capital. A round of applause, ladies and gentlemen. Kevin Abekasis, Head of Investment Operations at Morningstar Ventures. Yep, Kevin, join us. I know, we're looking for the other two speakers who have just gone to get coffee. Bandeep Singh Rangar, CEO of Finekia. Is he here? They're still trying to find him. Cinderella Mar, Managing Partner of Glass Ventures. Again, guys, they just went to get coffee, so they'll be joining us shortly. And last but not least, Shaz Jalil, Head of MENA for Chainlink. I'll give them like 2 minutes to join us, otherwise we're going to get started with the conversation. Okay, I think we should just get started with the conversation and they will join us when they do. Again, this whole concept of this session is about blockchain innovations and its future, and we are going to talk about the role that venture plays in all of this. Just to kind of like start things off, I always like to do this wherein we get a lay of the land, where we are now, how far we have come from when it all began, so to speak, when we started talking about blockchain, and where do we go from here. So Vineet, I guess I'll just start with you. Just give us the lay of the land. How far have we come since kind of like blockchain burst on the scene, and where are we going in terms of what's next?
Okay, I think before answering that, let's get the audience engaged as well. Guys, how many of you have actually bought Bitcoin? See, we are not even started. Nobody's raising hands. We are so early. How many of you have actually transacted? That means either lent, borrowed, done some NFTs or stuff like that. Guys, come on, this is just 5 or 6 hands, so we have not even started yet. You know, when people say that Bitcoin's gone to 40 or 50, I don't know what the price is. Actually, it's all not even so early that you have no clue, because, you know, it's not about people speculating on the price of Bitcoin and talking about crypto. It's all about how much are you putting that crypto in action. You know, for me, if you Google my name, I bought the first house on Bitcoin in Dubai. This was done 4 years back. People have not done those transactions, and trading is not really use case. So too early in the market. I think there are still 8-9 years of serious growth. This is not sustainable 20% a year growth, but serious multiple growths in the market. And majority of this growth will come from places like Latin America, Africa. You know, everyone's been talking about ETFs. ETFs is just a speculative instrument where people are putting money in to make money. But in the end, this technology will become like the internet of future if people actually adopt it. You know, people use it. RWS come into place where people put their houses on chain and lend and borrow on it. People use it as a way to do identity, you know, Humanity Protocol, or you have WorldCoin, which is like Aadhaar card in India. You know, it's basically putting your identity as a transaction in, and people can identify with that. So lending, borrowing, for example. Why do I need a bank? You know, why do I need a Citibank? I can go to an Aave or a Compound and put all my Bitcoin and get 75% LTV. These use cases, when they come into adoption, which I think is still 3 to 8 years ahead, is when this market will be mature and big enough.
Then tell me, like, why is it going to take so long, though? Like, why is it going to take so long? Like you said, it's going to be 8 or 9 years, still these use cases come into the picture. Why is it going to take long? What are the challenges that still remain?
Okay, so people should understand some numbers first. Do you understand what percentage of the world population is in crypto right now? Would you have any numbers?
I mean, I'm sure it's like a very small number.
So technically, as of today, there are, as of last survey by crypto.com, we are sitting at 500 million wallets. Now, 500 million wallets means less than 5% of the world population. Now 90% of these people are just speculating. That means they wake up to see Bitcoin prices. So technically it's less than 1% who are into crypto. And why adoption will take time? Because there are regulations. You know, some companies want to stop crypto's growth. They don't, you know, when you look at India, when you talk to regulators in India, the first comment that they said at the VARA conference was, oh, we want to stop this. My question was, do you understand this? No clue. So the reason why it will take time is because people need to get educated. People need to understand what it is. Real adoption, real users need to come, and then it will grow that hyperbolic mode. It's too early. People just think it's a magic coin.
Kevin, same question for you. Like, what are the challenges that remain in terms of this getting more adoption, like blockchain having more mainstream adoption?
Who here, raise hands, has a centralized wallet? Who here has a decentralized wallet?
Bandeep.
Yeah. You can join us. There you go.
So essentially, just looking at the crowd, they know the pain points for adoption. Seed phrases, gas fees, bridging, you name it, networks. The points are endless. In order to increase adoption, we need UI UX user experience to be seamless. We need people to interact with the blockchain without knowing what they're on the blockchain. So for those of you who are UAE residents, you have a UAE pass on your phone. Many of you are not even aware that that runs on blockchain. And that's how it should be. You should be able to use dApps or any type of interaction on your phone or laptops without knowing that you're using blockchain. And I think that's the key. Making interactions easier for all the users. I'm not talking about my 90-year-old grandmother who can still use messaging services on her phone. I'm talking about the everyday user.
This brings me to, you mentioned UAE Pass, and this kind of brings the topic of regulation and what that has to play in terms of, again, increasing adoption. Bandeep, you just joined us. I'm literally putting you on the spot here. What's the role that regulation or regulatory insight, like oversight, has to play while still pushing forward blockchain innovation?
So, you need to switch it on.
So, look, ultimately, what you're doing is creating fractional ownership of assets via the blockchain. That's all great on paper, right? That's like saying I'm creating a company with a share class structure. It doesn't matter the entire world unless someone's buying that, right? The world goes around based on business, and that's about buying and selling. If you want to sell this, you need regulation to make sure people feel safe buying it, and that there's clear guidelines as to what kinds of tokens you're buying for what purpose, with what kind of underlying security and protections. Now, I believe the ultimate beacon has to be the US regulator, right? If you look at the equity world, 60% of all stock trades happen in the US, right? You look at the world trade that's settled, 88% is in the US dollar. 60% of world financial reserves and currencies are in the US dollar. It is, unfortunately, for some of us in crypto, a US regulation-led seismic change that's needed. The beginning of that, you may argue, the little chasm that was crossed was the approval of the ETFs this year for BTC and ETH. But it's the first of 10 steps that we need to go through.
Yeah, sorry.
I am going to be a bit brutal here, because we're not here to say what people want to hear, but what people should hear, right? So I will tag along on the UX, and UX is the nerve of the war. At the end of the day, if you look at the market, and per an investor perspective, you want to deploy capital where you see mass adoption, because this is where you see the dollars, right? And what we look at the existence right now, let's face it, the Web3, right? Whether it's DeFi or Metaverse, it's catered to XYZ generation or to former traders. And I'm not in a game to educate my mother on how to go to MetaMask, right? Let's face it. So the UX is really at key. And where I like to debate to elevate with Bandeep here, obviously we need regulation, but I also like to say you build, the perfect UX, you get the adoption, and then you can knock on the door and say to the regulator, okay, now we can talk. Because very often, if you go too quick with regulation, what happens is that it actually prevents innovation. And this is where there is a fine line, right?
So speaking of jurisdictions, and this was going to be one of my later questions, but I'm going to ask it now since we're talking about jurisdictions. What role is the UAE playing, like with respect to what it's doing in the field of blockchain, Web3, fintech, you name it, it's taking a very forward mindset. Is that going to help? Is that helping this ecosystem? And if so, what more should it be doing? What less should it be doing? Yeah, Sindra.
The fact that if you look into it, back 3 years ago, there were nothing, right? And overnight, there are new regulations coming, and they were quite lenient towards the industry. And you can say it's a success because look at where the UAE has been 3 years back in tech and where it is today. I mean, let's face it, the whole world keep on coming here. So they must be doing something right.
Vineet, same question for you. Again, the UAE as a place for innovation in blockchain, can it be one of the forerunners, or are we, like you said, a long way ahead?
So I think the key part of UAE is that it's open to innovation. It thinks the 1990s when you had these duty-free bags and it told people come buy things for cheap and take it around. It was innovation. That bag in itself was an innovation. When it came to the duty-free zones like Jabal Ali, it was an innovation. Interestingly, property was an innovation. And 3 years back when COVID struck, they knew everything's closed. What do we do? And that's where the innovation on allowing crypto companies and crypto founders to come here was definitely an innovation. And this probably comes from the fact that UAE has always been a trader community. It was a trade post from earlier. So I think it has started faster than anywhere else. When it can be compared only. When I compare it with US, where people are clueless at the moment and they're trying to stop it up. When you talk about India, India, they are clearly saying that we want to stop it up. So the thing is, yes, it's faster than there. They're ready to innovate. They're ready to learn. They're ready to welcome people with open arms. A second point on the previous question about regulation, though, I also need to highlight here is, people say regulation will come and people will get things adopted. I think pure play regulation will take time to come. Reason is, if you remember how Indian stock markets went up in 1980s, they came up. People were buying on rumors. Anyone was listing anything. You had the Harshad Mehta scam. You had the Ketan Parekh scam. Regulation came 15 years later, real regulation. After people jumped up from their rooftops. Still in crypto, that hasn't happened yet. So I think regulation is still far ahead. But whatever lead has to be done, UAE is definitely leading the way. I think Saudi and Qatar will be the next ones who will take it ahead. And hopefully the whole world takes over. So let's see.
So we've been talking about blockchain innovations as kind of a broad aspect. I kind of want to talk about actual use cases or technologies that are of interest. Maybe Kevin, again, coming from Morningstar Ventures, what sectors or areas are your fund looking at, and where do you think is there the most potential for growth?
We're looking at many sectors, but essentially, if you look at innovation, blockchain, going back on the regulation side, regulation will always lag behind innovation. That has happened in any industry. What sectors are we looking at? Right now we're looking at AAA gaming, not those Web3 games where people come just to try to make money and extract value from the game, but games that can be played by millions of users across the world, PlayStation, Xbox, PC. So you have a AAA game now called Off the Grid by Godzilla. Why are we looking at that? Because we need to bring more users to blockchain. And as I said initially in my first point, if users don't know they're interacting with the blockchain, then you have more and more people coming to blockchain. So gaming, AAA gaming is one of those aspects. And also infrastructure, tools, and chain abstraction. Chain abstraction being users able to use seamlessly blockchain without knowing what blockchain they're on, without having to pay gas fees, with being able to use one wallet, not having a seed phrase, essentially simplifying the life of users.
Can I just add a few things there? So look, if you go back, 50 years or 100 years, the most valuable things for an economy were basically three things. You needed raw materials, you needed energy, and you needed industry to basically make full use of that. The UAE, unlike a lot of the other parts of the world, has lacked those three things. It's not the richest in energy, there's not a lot of raw materials, there's not a lot of manufacturing. That's in other parts of the Middle East or Western Europe or wherever else. In this new age, the three most important things are a new money, asset management, which is incredibly fungible and moves really quickly, data, and trust, right? The UAE is exporting that today. It has become the repository of those three precious resources. And the most expensive commodity for us today is our attention span, right? Everything is fighting for that, whether it's TikTok or an advertisement there. What the UAE is doing is got our attention. I traveled to London. Last week I was in Miami. I was in Toronto. Guess what people talk about? The UAE. They have captured the imagination because they're exporting that. They give certainty. The regulator here has got one of the three things that a lot of regulators don't have. Regulators either don't have guidance or they have guidance, but they don't have mindset. Here they've got all three things. It's not through enforcement, there's actual guidance, and then there's the mindset to make it work. So that's making this place incredibly attractive and drawing all the things that make it really powerful today as an economy. Most of all, it's not just building a crypto oasis, it's not just building VARA-style rules, it's building an asset management business for this new world of digital assets with digital money. That's the real secret sauce of this place.
So again, we're talking about like, Web3 as, this new, shall I say, horizon of things. But again, Cinderella, I want to bring you up because Glass Ventures is looking at Web4. So let's talk about that too. Like, what are the limitations of Web3 and how is Web4 going to change that or like resolve that? And again, for the people in the room, why should they be looking at it and what can they do to get in on this early rather than later on?
Well, I will ask you, would you like to stay here and looking at the train passing by and get on the last wagon? I mean, first window, front seat, right? So it's all about future-proofing yourself. It's coming our way, it's unavoidable, but you want to be part of it. It's never too late to crash the party. This is tech, that's the beauty of it. But hey, I'd rather be, at the forefront, right? So when at Glass Ventures, we decided to redefine a new category for the market. We were looking at the new things. What's next? The new iteration of the web. So to make it simple, it's all these application layers that are built upon Web3, the existent, but to make it more accessible. As I said before, we need to find a way to get mass adoption for Web3, right? So when it comes to seeing a project that has all these tools, that could be a blockchain project with even a bit of Gen AI to make it accessible. But at the end of the day, if in my individual retail capacity, I'm like, oh my God, I want in, I see mass adoption, I see the cash flow, right? So this is exactly where we stand right now. It's enough looking at projects that are, nice have, but what's the utility? What's the product fit? How are you going to make it work to attract a community, right? Whereas you have ChatGPT coming in. You don't know it exists. The day you met him, it's your new best friend. And the beauty of it, they didn't even need to have a marketing person. Because guess what? Your pal call you and tell you, have you tried that thing, right? That's the beauty. That's what we are looking at.
So again, this sector in general, and this is a question for everyone really, this sector in general is still a bit volatile, right? There is a certain element of risk involved. What would your advice be to people when it comes to managing this risk and, staking their, hedging their bets rather? Yeah, again, question for everyone. Yeah, go for it.
So when you say risk, do you mean risk in investment? Do you mean
risk in investment?
Because see, as a founder, risk is regulation risk. You are in the US, next day you are in jail. You have multi-million-dollar companies which are in China, and next day, 7 days, the phone is off. So that, it happens, unfortunately.
I mean, it has happened.
Yeah, it has happened. So, but from an investor perspective, I think the risk is the technology risk. Everyone wants to build something crazy in here, but it's still untested, it's still growing. There have been multiple hacks that have happened in the system, and people are trying to build things which might not be feasible and sustainable. Building a token that goes to $1 billion is easy because, making a factory is difficult, making a token is easy. But the risk is of people who are building it up, people who don't have experience in building it up as well. So as an investor, I think the due diligence process is exactly as you would do a due diligence on a startup. When you meet a founder and he has never done anything in his life but run a grocery chain in London, would you give him $10 million? Unfortunately, in Web3, in the last season, I have seen enough grocery owners getting $10 million.
I see founders like looking at.
Yeah, and then, the use cases. People come to you and say, we are going to plant trees in Africa and this is blockchain, give me money. Are you joking? Like, when someone comes to you and says, I'm building a lending and borrowing platform across multi-asset classes and I have $100 million in liquidity already to sustain it up, you understand where blockchain would be used. But planting trees in Africa, so founders, use cases, and I call it capability, capacity, and approach. Does he have the capability to build the thing he's talking about? Does he has the capacity to build something? You have to leave your Saturday, Sundays. You can't be holidaying in Dubai on Saturday, Sunday and building a multi-billion-dollar company. An approach, you have not done anything in your life, no one, and you're landing up trying to build the next big, SpaceX. Doesn't happen. So that's what investors need to do. Do their due diligence. This is not magic coin. This is just a startup trying to do something which needs to be able to do that.
What I'd like to add on that is a lot of these projects actually don't need a token. So think about utility. How do they differentiate? Who are their competitors when you're doing your research? Could they operate the exact same business model without a token, or is that just to extract value from the project? And as Vineet said, it's been very easy to raise money in crypto, and capital is not a problem. But how they deploy it, how they manage resources. Everybody can come up with a great idea. You have a CTO, you have great code, but then how do they deploy? How's the team? How do they market? All different factors they need to consider. And as retail, they need to understand that where's the value and essentially where's the utility. And most people have lost that aspect of utility, in my opinion.
Bandeep, same question for you. Is there any personal characteristics of the founder per se that you look at, or ventures per se that attract you and say, okay, this is something that you would be keen on?
So I'll take a little different twist because I don't think there's anything else I can add in terms of risk factors. You've got technology risk, people risk, market risk, regulation risk. My biggest risk when I talk to people, we're sitting in a fairly cocooned environment here in terms of people being very crypto savvy. Yeah. But if I was in New York 2 months ago at a Finovate conference, which is financial innovation, there were probably 200 people in the audience, and I did a poll and said, how many of you know about tokenization? And probably about 4 hands went up, right? So for me, the risk is timing risk, people missing the boat. If you want to have the biggest upside on this new digital asset economy, you got to get in early before it becomes normalized. Once it's normalized, your returns get normalized. So my biggest risk for people as an advice is don't miss the boat, right? The universe rewards risk. That's my guiding principle. Your risk is not being part of it.
I want to give you a hug. This is exactly that. After, of course. Not too public. But that's exactly that, right? When you speak about risk, I'm like, well, the risk is not to go in, right? It's not a FOMO. It's not the fear of missing out. It's the risk of missing out, right? Oh, I created something new today.
We should call it risk of missing out
That's
from going forward.
Yeah. Right? It's the REMO, the risk of missing out, guys. At the end of the day, if you look into it, disruption is the new normal. And now it's all about the disruptors of the disruptors, right? And even when you invested in the past in a tech company, and with no offense, so not a CTO and so on, so how are you going to prevent that company to go south just because that company is going to be disrupted by a fintech company, an AI company, or a blockchain company? So at the end of the day, it's all about buying you a hedge against your past investments and against the future. So don't remo, right?
So at this point, we're literally 5 minutes left. Any questions from the audience? If you can just raise your hand, I will try and get a mic to you. Otherwise, you can come up forward and ask your question. Anyone with questions?
Whoever asks a question gets an airdrop from Morningstar, guys. $1,000 airdrop.
Yes, please.
There we go.
Ooh la la.
Suddenly the
This is
hands
how
are
we-
up.
We're going to get grilled, guys.
It's okay with the airdrop. I'll let that pass. Just to anyone that wants to take the question, I've been involved in innovation for about 30 years. I've raised a lot of capital over the years. I've also spent a lot of capital of my own. The risk appetite is still not there yet, right? I'm just reading the landscape compared to other decades. What's the flipping point? When does it become, when does the risk appetite actually say, hey, we're going to pick up really good ideas early in the game? Because I see a lot of VCs dressed up as Web3 VCs, but they're still the same old VCs, same old metrics. So the thesis haven't really changed that much. Or am I wrong?
The question is about, when does the risk appetite change, I guess, when it comes to, is that correct? Yeah.
For institutional investors, or?
I see a lot of projects out there and they just don't meet the metrics, the thesis of the investors. A lot of the investors project themselves as Web3 into tokens, but they're really looking for equity plays, they're looking for solid revenue, ARR. It comes down to the same numbers as it's always been. There isn't been a huge change of moving to tokenization as much as I think it should.
I would just say I think it's also a lot about market cycle, right? About market cycle. So obviously it's a different play when it's a bull market, and I dare saying you would have cocky founders coming with valuation up to the roof, right? And when it comes to bear market, eventually they will bend their knees and accept different conditions, right? So the market cycle are playing a big role also in terms of appetite and so on, and the attitude you get, right?
So, don't fully agree to your point that VCs look at the same standard conditions as revenue and stuff, because in Web3, not a lot of companies have that revenue that you're talking about. It's a Web2 play, I completely understand. You're building up a food delivery startup, you need to have $1 million in revenue. In Web3, it is also what change are you going to get to people's life. This was something that was told to me by someone who invests in Draper. He says, I only invest in things that will change the way you work. With Uber, they said the thing was that it made me lazy enough not to go down and wait for a taxi. It changed how I think about getting my taxi. So in Web3, it's still about the concept part of it, where people are trying to change how people will utilize finance, identity, and things like that. There might not be a lot of revenue there. Unfortunately, there is no. Like, when you talk about this game, he just mentioned about a game off the grid, and I have to shield it because they got me the allocation in there. This is the first game which actually is being played by a lot of people. There are no tokens, maybe there's not that much revenue yet, right? But they raised $75 million. But the game has been done really well. And the hope is that someday it becomes a Fortnite and becomes a market leader and gets people to adopt Web3. So in Web3, for sure, at the moment, revenue doesn't play a core parameter. User numbers do, because see, as I mentioned, we only have 500 million people, out of which 90% are speculators. I can assure you that people here have not played a Web3 game. They might raise hand, but they have not played. So I think with us, it's all about adoption.
I think if you look at the internet when it started, and they had analogies from there, I was involved with Skype in the early days, and we would go out to VCs, they'd be like, where's your revenue model? We're like, we don't have a revenue model right now. We have a user model, and we have a minutes model. But at some point, if you get millions of people using this, and you flip on a billing switch, you then create revenue. The mind shift changed, because I remember at Bloomberg, where I worked, we're saying, well, we don't believe in the internet companies because we believe in gravity. It's not unlike what Jamie Dimon said earlier this year at Davos, when he said he wouldn't advise people to go into Bitcoin. Well, Bitcoin's up nearly 50% since then. The tipping point for the internet was when companies went public, because then the metrics of revenue and EBITDA started getting applied, and they worked their way backward to the internet startups. And we're beginning to see that with the listings of the likes of Coinbase working its way backward to the startup community.
Do I have any other questions? I saw someone else's hand, but I can't remember them now. No? All right, I think we will have to wrap the session up. Thank you. Yes, sorry, you wanted to say something? Go ahead.
Yeah, I want to get a sense from the panel as to the potential of any seismic shift with the US election and who they're betting on.
Good question. Nobody's answering.
Let's start. So what is the likely impact of the US election, and who would you bet is going to win?
That's a tricky one. That's a tricky one, because 2 days ago, a gentleman named Yat, I don't know if he's around, Yatsu from Animoca Brands, broke my heart when he said that if he had to bet, it would be Kamala, which is unlikely to be the best for our industry, as we might know. just because Taylor Swift vouched for her, and she might get the YAF to vote, which doesn't happen very often. So I've said a lot. You understand which way I want this to be taken.
Got it. So the Taylor Swift factor, maybe the Swift.
So there's a data point that's on the internet. It says Kamala's party has given a return of 230% or so, and Trump's party historically has given a 120% return. That's the return that they have come out. So unfortunately for me, how I think is that whoever wins, the markets will still go up, because the last 2 years, people have kept their money on the sidelines waiting for a market to come. Can people keep their money on the sidelines for 10 years? No, money has to work someday. So personally, I don't think that markets are not going to move. But what I think is, in 2026, you're going to have the .com session of crypto. So please make as much money in the next 1 year and prepare for the .com of crypto.
I would actually echo that and say the choice is not necessarily Donald Trump versus Kamala Harris. It's Elon Musk versus Mark Cuban. So that's where you got to pick up.
Guys, I have a question from everyone. I just have a random raise of hands. If you think you are going to win the elections, would you go on raising $20 million, which you would never raise as well? Would you do something like that?
Say it again.
If you're going to win the elections, you are confident you are going to win the elections, would you go raising $30 million on a token raise, which doesn't even get help? Would you do that personally?
No.
Maybe he is not going to win. Guys, you understand, right? He was raising $30 million, which didn't get raised. Would a potential confirmed US president do something like that? I leave it open to you guys to go home and think about it.
And that's a great note to close this conversation on. So thank you, Vineet, Kevin, Mandeep, and Cinderella, and thank you to your audience for being part of it. And yeah, stay tuned for the rest of the sessions. Thank you.
And thank you, Abby.
Thank you, Abby.